Good evening, everyone. I'm happy that I get to share with everyone in this group through text as well as meeting and sharing with you in this live broadcast. Now, of course, thanks to many of you here for your continuous support. Now, okay, before we start, I would like to do a sound check. So if you can hear me loud and clear, please type a yes in the comment chat area. Okay, amazing. So, once again, I would like to thank everyone here for your support. Now, welcome everyone to our online live sharing class. I am personally very honored to be able to share with you some of my personal insights and experiences on stock investment and trading over the years in this format. Now, first of all, let me clarify with you because I am not a professional speaker. I might not be able to bring you any pleasant visuals or auditory entertainment in this process of sharing, but I will definitely share the stock trading experience I have accumulated over the years with everyone here without reservation. Now, if you see any flaws or disagreements, I am sincerely going to apologize in advance. And then we can always have a discussion of if it really was a mistake or we look at things at a different view. Now, the stock market can always be interpreted in different ways, and I am always open to listening to different views. Okay, now enough chatting for the regular stuff. I want to start today's content without wasting everyone's time. So today I will mainly share with you the following aspects. So firstly, as an internationally ranked asset management company, why did we come to India? And why should we fully enter the Indian market? I want to tell you our purpose. Secondly, we need to conduct a comprehensive review of today's market. That is going to include the Nifty 50 as well as the Sensex. And next up, many people have been sending me private messages telling me they want to learn more specific and classic techniques and experience concepts and so forth. So today, we will start to learn the most classic technical content in the market, which is the Dow theory. Then, to wrap it all up, I will also conduct a review of the stocks that I have recommended to you in the past. Okay, so to our purpose. So, why did we choose the Indian market? Now, India's rapid growth over the years has long attracted the attention of capital funds from around the world. More and more international funds have entered or will be entering the Indian market, and we are no exception. So, India has many advantages that other countries in the world do not have. So, I'll give you some examples here. Number one, India has the best growth potential compared to all major markets, both economically and in terms of underlying corporate earnings. Example number two, India is already the most populous country in the world with abundant labor force, but its demographic dividend is far from being fully utilized. And then number three, in the long run, India does perform well, and foreign investment is expected to reap returns because there is no room for foreign institutional investors to increase investment. So, next, we will briefly share India's advantages in the early stages of development. Now, the first thing we're going to talk about is called low foundation determines high growth. So, why do we say that India's development space or development potential is huge? So, the first reason is this: the low base determines high growth. What does this actually mean? Now, it is undeniable that India's economic foundation is not high. India only became a middle to low income economy in 2018. And it was not until after the COVID 19 pandemic that the per capita gross domestic product continued to exceed $2,000. The lower the starting point, the greater the gains from the reforms. Here I have listed some data. So let's take a look at it from a chronological order. In 2019, India's per capita GDP was at $2,050, an increase of 3.84% compared to that of 2018. It had just exceeded $2,000 at the time, but we entered the pandemic stages into 2020. So, influenced by the pandemic, the per capita GDP for that year declined to $1,913. That's a decrease of 6.68% compared to that of the 2019 fiscal year. However, 2021 and 2022, the per capita GDP truly stabilized above $2,000. So in 2021, the GDP was at $2,238, an increase of 16.98% compared to 2020, showing a significant growth rate. And then in 2022, it was up to 2,389. So that's a 6.72% growth compared to that as of 2021. Now, from these charts, we can see that in fact, if not for the pandemic, starting from 2019, the per capita GDP should have been stabilized above $2,000. Now, everyone, I want you to also look at these outside data. The per capita GDP of the USA is around $76,000. Japan's per capita GDP is $35,000. And then China's per capita GDP is around $13,000. India's national goal is definitely to become a developed country, but currently India's per capita GDP is only around $2,400. So, I ask everyone here, isn't India's development potentially particularly huge? So you can take a look at some data on this chart that I have up here as well. You can tell, like, these are all the stats that we kind of went through. So 2019 was 2050, then a little bit of decline in 2020 to 1,913. And then from then on, it stabilized above $2,000. Okay, so next up, drive for reform. So we'll see India's rapid development in recent years has been driven by reforms. So why reform? The purpose of reform in any country or region is to unleash productivity, develop productivity, and make the country and nation take off. So of course, India is no exception to this. Now, the introduction of national goods and services tax in 2017 simplified a complex web of central and state taxes, and then it helped streamline the movement of goods across India's 36 states and territories. Now, the rate of highway construction has tripled since 2015. Capital expenditure on railways as a share of GDP has more than doubled over the last decade. Now, both World Bank and International Monetary Fund have hailed India's world-class digital public infrastructure, which has enabled the government to better target welfare programs and improve tax compliance. Now, human development indicators show similar trends in improvement: access to flushing toilets and cooking gas, infant mortality, and household electrification have all shown extraordinary improvement over the past decade. So a decade ago, with just 10 years, 40% of households were without electricity. Today, the share has shrunk to less than 3%. Development is improving the lives of more than just the few at the top in India. So as you can see here, over the past decade, we have been pushing a lot of out of poverty stages. We're moving into a more middle class income. Lots of infrastructure changes, lots of government contracts to help those companies out as well. 40% of households without electricity about 10 years ago just sounds crazy now, right? Now, from a certain perspective, reform is also painful, especially for a few invested interests. However, overall, the era of reform is also an era of vigorous development, filled with positive energy. Personally, this is also one of the important reasons why I choose to return to India. to be able to participate in this passionate era. So I feel honored and proud of India. Now, another important reason is that China's growth rate is returning to economic average. It's prompting capital and attention to shift towards India. So, looking globally, are there any countries or regions that have more development potential than India? The answer is none. So, over the past 4 years, India's net foreign direct investment as a share of GDP was 3 times that of China. 15 years ago, flows into China were sometimes 4 times greater than flows into India. Foreign direct investment is often followed by expats and international professionals. Now, also, over the past 4 years, a bad period for capital inflows into emerging markets. So, net portfolio inflows into India have been positive, while China has experienced its largest capital outflows in modern time. Now, the evidence seems very, very clear, but skeptics still question whether India can maintain its lead. Perhaps some expect India to disappoint in the future because they have been disappointed in the past. In fact, disappointed expectations are kind of like a legacy here. But it's important to clarify the disappointment. The historical challenge facing India is not so much to grow rapidly, but rather to sustain it. So, for example, between 2004 and 2010, India's GDP growth averaged 7.2%. One problem is that India has a reputation for chronic underinvestment. But that's all in the past. At present, capital investment accounts for more than 30% of the GDP, which is higher than Taiwan, and it's the same as South Korea. India is the only Asian economy whose investment to GDP ratio is higher than before the epidemic. Its import dependence also declined due to increased remittances and the rise of global competency centers that build on India's previous success in business process outsourcing. Remittance volumes have also grown strongly since 2022. As a major country in Asia, India not only wins the competition from China, but is also the fastest growing economy in the world. And this trend is continuing. Now, what was just briefly spoken about is only at the national level, talking about India's development potential and room for growth. But for a company, we have the right soil for the company's development. So, India is the market. So, number of investors in India has crossed the 150 million mark in March. In March, despite the market volatility, 3.12 million new DMAT accounts were added, so taking the total to 151.4 million. The milestone was achieved 19 months after the total number of DMAT accounts hit the 100 million mark, signaling a growing numbers of domestic households making direct equity investments. Encouraging returns from the domestic market over the past 12 months have ensured a steady influx of new investors. Actually, the growth in the number of Indian investors is not just this year. It has actually been growing rapidly since the outbreak of the pandemic, which has also presented an opportunity for our company. We are willing to enjoy the dividends of Indian reforms and economic development together with the vast investors in the Indian stock market. Now, we hope to move forward together with the vast investors in the Indian market so that our company can grow and expand while also helping investors achieve their financial goals. So that is sort of our purpose, why we are here in India. Lots of potential, lots of growth. So finally, I'm going to go over some details about our lucky draw. So currently, the world situation is ever changing rapidly, and the globe is in a midst of unprecedented changes. Since we have entered the Indian market, our goal is to become the industry leader in Indian foreign asset management companies. In order to quickly increase our market share and reputation in India, and to thank the strong support of Indian fans and members, we're going to be launching this Gratitude Lucky Draw event. Now, we will not only conduct online investor education platforms in the form of these live broadcasts, but also have a series of these lucky draw activities. Now, participants need to send screenshots of attending the classes to one of the assistants as requested, and then fill out a questionnaire to participate in the lucky draw. Now, event dates are going to be running from April 21st all the way until April 26th of 2024. Now, the specific prizes for this event are as follows. So we got the first prize is a MacBook Pro with the M3 Pro for a total of 10 winners. The second prize is an iPhone 15 Pro for a total of 50 winners. The third prize is an iPad Air for a total of 100 winners. And then the fourth prize is an Apple Watch Ultra 2 for a total of 300 winners. Last but not least, our fifth prize is an electronic shopping voucher worth 300 to 500 rupees each. The number of winners is designed to be 10% of the reserve participants. Now, due to the limited numbers of prizes in this Gratitude Lucky Draw gift giveaway activity, registration is on a first come, first served basis. So according to the information provided in the survey questionnaire by the participants, the lucky draw activity will be conducted under the notarization of a notary office. So the list of all the winners will be notified to everyone at the earliest opportunity. Also, please rest assured that all prizes will be arranged to be delivered to everyone. I want to emphasize that as long as you remember one thing, winners just need to wait for the prize to be delivered. So all costs will be covered by our company's headquarters, so there's no cost incurred by you. So rest assured about this. It's 100% covered by us. Furthermore, I would like to explain why we are having this online live sharing and free lucky draw activity. So let me reiterate that the reason for starting these online live sharing is because we want to fully enter the Indian market. So in the early stage, we need everyone to experience our professionalism, profitability, and comprehensive service. Only when you recognize our company, our team, and myself can we smoothly expand the market further. So only when you think our company is good, you're willing to trade with us. The lucky draw activity is to thank the vast number of Indian investors for their support. We have come to the Indian market for publicity, and such an activity is going to be necessary. So, don't you all agree with me? Now, the first step of our grand plan to enter the Indian market has already begun. So, everyone participating in this live lucky draw activity, please contact my assistant promptly. Now, just a quick reminder, the lucky draw is just a way of giving back to all the members who have supported us up until this point. So thank you again for everyone that has given us full support. Now, of course, since we have come to the Indian market, what we can bring you is definitely going to be more than a couple of prizes. So in the future, we will be arranging a series of major investment profit activities to lead everybody to gain greater profits as much as possible in this bull market. So let's not talk too much about these follow-up arrangements for the time being. So after all, everything needs to be done step by step. Okay, so next we're going to be reviewing today's market condition. So let's first take a look at the Nifty index. In the process of analyzing the market, we often use the term trend. So first, let's identify the major trend of the Nifty 50 index. So today is Sunday, so we're going to be doing a review on this week's market performance and analyze the market from a weekly chart perspective. So this week, the market has been mostly in a downward trend up until Friday when it opened low and it closed high. Now, essentially recovering most of the week's losses. Not ideal, but it's a good hike. Now, looking at the weekly chart, it shows a long lower shadow candle. Now, what does a long lower shadow candle typically represent? It indicates strong buying pressure at relatively low price levels. Now, specifically for this week, the sharp decline in a short period led to many short positions being covered and buying on dips. So, driving the market significantly higher. So, let's take a look at the chart. The current candlestick pattern on the bottoming out and rebounding is very, very crucial as it started to bounce back at the lower edge of the uptrend line within the upward channel. So let's zoom out to a larger time frame. As we are currently looking at the weekly chart, do you see a strong uptrend? In a slightly longer time period, the two uptrend lines and the MA30 and the MA60 is showing a bullish alignment. So those are our 30-day moving average and our 60-day moving average. The market is steadily moving upwards. So can we conclude that the medium to long-term bullish trend in the Indian stock market remains strong? Definitely yes, remaining strong. So even if there are minor adjustments in the daily chart in the short term, there's no need to worry regardless of the reasons. Now, of course, in the short term, it's also important to pay attention to trading aspects. So after all, the market has been swinging upwards for the past 2 to 3 months. All right, so this is going to be our Sensex. So let's take another look at the Sensex index next. It's still a weekly chart, so level graph, but this time let's look at the Sensex index from a different angle. From the weekly level, the Sensex, we can clearly see that it's starting to from the middle of 2022 up until now. Now, there has been a noticeable uptrend channel that has been maintained until now. Now, it's a big channel. Additionally, from the end of 2023 fiscal year until now, there's been a smaller upper channel also maintaining its upward pace. Can we consider the Sensex upward trend as healthy? Right? So there is no need to worry about the trend on the Indian stock market. What's causing concern for many investors in the market is just short-term fluctuations. And you're going to be hearing me talk a lot about short-term fluctuations. Volatility in a short term does not impact us on the long run on the bigger picture, right? So, speaking of this, there is one thing we need to pay attention to. Just because the overall trend is in a positive state and there are no issues, doesn't mean we can boldly and confidently invest in just any stock. It's not necessarily true. So while there's no problem in being bullish on the stock market from a strategic standpoint, it's crucial to pay attention to short-term risks tactically. So currently, the delay in the Fed's interest rate cut intentions and the tension situation in the Middle East is kind of causing some short-term market volatility. Now, despite the significant rise in the Indian stock market on Friday, has the situation in the Middle East really eased up? Has Iran and Israel shaken hands? They haven't. So therefore, in the short term, the stock market is still subject to fluctuations due to the impact of the Middle East situations. Now, this adds to the challenge of increasing profits through trading stocks. Now, macroeconomics is always going to be affecting in the stock market, especially war. So that's one thing that we always try to keep updated with is the news. As I've already mentioned, since we are now in the Indian market, we will provide you with more professional services and a higher certainty of profit. Next, we're going to have something called a wealth growth plan with an expected profit of 100% to implement. So currently we are arranging and negotiating. So don't worry, once everything is set up, I will be notifying you and providing with detailed information. Okay, so most of you often ask me, how do I usually analyze the market? There are so many people who often send me private messages and then they ask me to talk more about trading skills. Now, our live broadcast class has officially begun. In the future, I will gradually introduce what I've accumulated over the years on Wall Street. I would like to share my investment experience with everyone, so hoping that everyone can improve together and let us all go further as well. Now, what I can share with you today is the most classic technical analysis content in the market, the Dow theory. I want to be very upfront here. The lesson on the Dow theory is very fundamental. I'm just trying to get everybody, comfortable understanding the fundamentals first. There are tons of content out there where you can add on to the Dow theory as well. Maybe we will do some of that later on as well. Now, for technical analysis, Dow theory is very, very important. Why is it so important? Because Dow theory can basically be said to be the originator of all the technical analysis schools in the financial market today. Now, many technical theories in the current market originated from this, and the Dow theory is not just a theory, it can also be applied into actual trading. So next, we're going to enter the study of this theory. So let's begin with what is the Dow theory. Now, the Dow theory is considered to be the foundational theory of technical analysis and the precursor of the technical analysis schools. The Dow theory is based on the writings of Charles Dow about market theory. Dow was the founder and the editor of the Wall Street Journal and also a co-founder of Dow Jones and Company. Now, the Dow theory is a financial theory that says the market is in an upward trend. If one of its averages advance above a previous important high and is accompanied by or followed by a similar advance in another average. I'm going to give you a quick example. So if the Dow Jones Industrial Average, so this is known as the DJIA, climbs to an intermediate high, an investor might watch the Dow Jones Transportation Average, which is the DJTA, climb to confirm an upward trend. I'm going to go over that a little bit more as well. So these two indicators are supposed to confirm each other. Now, a couple of key takeaways here, right? So the Dow theory is a technical framework that predicts the market is in an upward trend if one of its averages advances above a previous important high, right? So accompanied by a similar advance in another corresponding average. The theory is predicted on the notion that the market discounts everything and is consistent with the efficient market hypothesis, which is our EMH. Now, in such a paradigm, different market indices must confirm each other in terms of price action and volume patterns until the trends reverse. So the basic understanding of the Dow theory is based around market trends. With enough information, you determine what direction the market is shifting towards. Okay, so let's start off with three major assumptions. Okay, so we will start off with the first one, which is the price reflects everything and the market is always right. Now, the Dow theory applies to the efficient market hypothesis. Market behavior refers to the buying and the selling activities within the market. Characterized as a collective behavior, it encompasses four fundamental elements. We got the price, we got the volume, we got the time, and who participates. Among these elements, the price factor is the most important. Now, market behavior encompasses and digests everything. Market behavior will always appropriately anticipate and influence future events. One should not believe the market is always right and not become obsessed with a particular factor. The more one gets caught up with caught up on one fact, the deeper one is going to fall. Now, the market will not change according to anybody's wishes, right? What we should do is just follow the market. Number two, once a trend is established, it will be continuing. So, market behavior is a collective behavior. The concept of a trend is the core of technical analysis. The so called trend is actually a pattern, and the main idea is that the price changes follow certain patterns, with prices tending to move in the direction of their initial momentum. Now, market behavior evolves in a trending manner. For an established trend, the next step often continues in the direction of the existing trend, with a much smaller possibility of a reversal. So don't try to buy at the lowest point and sell at the highest point, because the reality is we can't predict the lowest or the highest points. So what we usually think the lowest point often turns out to be only halfway down. And then what we think the highest point often means selling a little bit too early. Now, lastly, for number three, history always repeats itself. And this one is something that you always have to remember by. Wall Street has nothing new. History always bears shocking resemblances. If certain conditions persist from the past, then the likelihood of a similar events occurring remains significant. This is considered from the perspective of human psychological factors. So moving on in the Dow theory, we must understand the main components of it as well. You must understand the concept of the market will be discounting everything. The Dow theory operates on the efficient market hypothesis, which is our EMH, which states that asset prices incorporate all available information, earnings potentials, competitive advantage, management competence. All these factors and more are priced into the market. Even if not everyone knows all of these or any of these details, it still is into factors, right? In more strict readings of this theory, even future events are discounted in the form of risks. Now, fully understanding these three major assumptions is very important, because this next part with the market discounts everything, sometimes people ask me, what does it mean when the market is discounting things, right? Now, the stock market being a barometer of the economy's health is only one aspect of the Dow theory. A basic premise of the Dow theory is the market will discount everything, meaning you have to collectively use all the information available to you. We're talking past information, current, and even in the future, is all discounted into the market and reflected in the prices of the stocks and indexes. Now, the next one is our three main market trends, which you will see here on the graphs. And I'm going to start by entering our bull market. For those who don't know what a bull market means, it means the price of the stock is going up. You're going to hear that a lot, these terms called bull market and bear market, right? Next, we have our sideways trend, which is this one in the middle, says sideways. This one means the stock is kind of fluctuating, relatively steady. Not too much heavy swings, just a little bit of oscillation. And then the last one we have is going to be our downtrend, which means we are in a bear market. And bear market means our prices are now taking a nosedive and it's dropping. So uptrend, we call that a bull market. And then on a downtrend, we're going to call it a bear market. Okay, so now that we understand the three market trends, we must look at the phases in the two primary trends. Now, according to the Dow theory, the primary bull and the bear trends passes through three different phases. So we're going to be talking about the two primary trends. So the two trends are going to be the bull trend or the bear market trend, right? Now, in a bull market, the phases are the First one is going to be something called the accumulation phase. So prices rise alongside an increase in volume. Then the next up, we have something called the public participation or the big move phase. So retail and average investors begin to notice this uptrend and they start to join in. Now, generally, this is going to be our longest phase. So sometimes you're going to hear like, oh, the stock market's been doing really well. We should all get in on the action. That is your public participation. That is when the news is out. A lot of people want to get involved, right? Then the last phase is something called the excess phase. Now, the market reaches a point where the experienced investors and traders begin exiting their positions while the larger average investing population continues to add to their positions. So what does exiting position mean? That means that we clear the stocks that we're holding in this stock. We have taken a profit, and then now we continue to look for a different enter point into the stock market or into the stock, right? So excess phase means that the more experienced traders are going to start exiting positions. Meanwhile, there's a lot of new investors are still jumping into the stock, thinking that it's still got a lot of room to grow, right? So these are your three main phases in the bull market. Now, onto our right-hand side of the slide, you're going to see something called the bear market phases. And what are they, right? So same thing, we got distribution phase. Now, where news of a decline begins to be distributed throughout the investing community via various channels. So you could hear from the friend, you can hear some like it from the news. There is just bad news going around and a lot of people are thinking about selling the stock, right? Then we got the public participation phase, which is the same thing as the bull market as well. So now opposes that of the bull market participation phase. Average and retail investors are selling the stocks now. So these are your average people. They hear the news. They're going to get rid of the stock. They're exiting their positions to reduce the losses. Again, even in the bear market, generally this is the longest phase. And then last but not least, we have something called panic or despair phase. Investors have lost all hopes of a correction or a full reversal, and they continue selling at scale. Now, what generally happens is sometimes the stock seems to be going down, but it rebounds or like there's a reversal for it to go back up. Now, in a panic or despair phase, that generally implies that people are giving up. They're going to continue to sell at a mass, and then the price will continuously drop. Okay, so next up we have something called the verification and the confirmation, right? So once we have confirmed our trend, we must cross-reference check with our indices movement as well as our volume trend. Now, for a trend to be established, the Dow postulated indices or market averages must confirm each other. This is very, very important. This means that the signals that occur on one index must match or correspond with signals on the other. If one index such as the Dow Jones Industrial Average shows a new primary uptrend, but the other one remains in a primary downward trend, traders should not assume that a new trend has begun. Now, the Dow uses two indices that him and his partners have invented: the Dow Jones Industrial Average, which we spoke about earlier, the DJIA, and the Dow Jones Transportation Average, the DJTA, on the assumption that if business conditions were healthy, a rise in the DJIA might suggest the railroads would be profiting from the moving the freight in this business activity required. So thus, the DJTA would also be rising. Now, trading volume generally increases if the price moves in the direction of the primary trend and decreases it if it moves against it. Low volume signals a weakness in the trend. Now, for example, in a bull market, buying volume should increase as price rises and falls during the secondary pullbacks because traders still believe in the primary bullish trend. If selling volume picks up during a pullback, it could be a sign that more market participants are turning bearish. Now over up here, you're going to see me have written out both price movements and trading activity are active inside the main trend. A bull market or rising tendency is characterized by rising prices and falling prices. Now, bear markets are typically inverse or extremely stagnant. So we must recognize the likelihood of a reversal if there is a divergence or a new or lower pricing combined with a lack of volume increase or the drop. So I want everybody to take a look at this graph over here. You're going to notice that as we are on the candlestick chart, we're going on an upward trend. We also notice that at the bottom, the volume is also spiking. So as we're moving up to an upward bull run or bullish trend, you're going to see the volume is consistently high. So at the end of the first yellow arrow, you're going to see the volume spikes, and then you see our upward trend. Same thing with the after the end of the second yellow, as we continuously start to hike again, you're going to notice that all the volume bars are always high. So they are confirming each other. We're on an upward trend. We have the volume to back it up. Okay, so next up, we have our closing price. Now, this is very important to understand because closing price and opening prices don't tell the story of the stock during the trading session. It only paints the picture of whether we have gained throughout the day or we have lost money throughout the day. The volatility isn't going to be shown or displayed, nor is the variance of the stock. Now, the Dow's theory simply considers the closing price of a trading day, not the high or the low points throughout the day. The majority of investors base the commission on the closing price since it's their final assessment of the day's price. Now, prices are ineffective for the remainder of the day, even if they cross prior highs or lows. Only a break in the closing price indicates that the breakthrough is even effective. That is true for both morphology and trend analysis. So over here, you see on my chart, on a regular Nifty 50 chart, you're going to see lots of volatility. It started up this high, and then at the end of the day, I have highlighted down here, this is the price at the end of the trading day. So what matters most is the ending price. Now, another thing is on this one, we opened at a certain price, and then it's gotten a lot lower. So to a trader's mind, we've lost money. The stock has just lost money that day. They don't notice about the oscillations throughout the day. They don't know about the drops. They don't know anything. They just know that it slightly went down. Okay, so now lastly, we must assume the trend will persist until a clear sign of a reversal. So there's going to be two major points here that you must always remember. Now, only after a definite reversal signal can we judge the end of an established trend. So once we have established the end of our trend and the reverse is happening, that's when we can close off our positions and move on to the next. Now, the reason why I emphasize definite is because it has to be a for sure reversal. That's when we can end the trend. Because there's a lot of times where we get false reversals where it looks like it's going to reverse, but it doesn't. So it goes down slightly and then it rebounds back up for a newer high, right? Number two, there can be no perfectionism in the stock market to allow for normal price fluctuations. Now, this is very important and is kind of good to get out of the way now. In the stock market, nothing is ever going to be 100%. There's no guarantees in this business. More experienced traders use up to 5 indicators to confirm their thesis before even making an investment, or sometimes even more. all we have is the information we see based on the same graphs that everyone else sees, and then we have to make a judgment call on how and when to invest, right? So even sometimes you have 3 to 5 indicators that's all pointing in one direction. There could be macroeconomic news that is disagreeing, so it goes the other way. There is never going to be a for sure thing. There's never going to be 100%. You just have to use and learn as much indicators as you can, and therefore you get as much information as possible for yourself. All right. So this is all we have for the Dow theory for tonight's class. If you want to learn more, I would highly recommend doing a little bit more research. Read up on the Dow theory. Take a look at some graphs that you regularly look at and kind of see if what you've been learning kind of makes sense, right? Now, let's track the stocks that we have recommended to you in the past. So we all know that the stock market will definitely going to have a lot of ups and downs, but it is very important to tell you responsibly that as long as it is a stock that we recommend to you, okay, no matter whether it rises or how it falls, we will definitely follow it through to the end. We're going to serve that thesis to the end, and we're going to be responsible to the end until that stock is completely closed. This is a long-term game. Sometimes if we expect to gain every day, then we are probably in the wrong business. Sometimes it will have a drop, but we have our indicators that are long term as well as short term, right? So maybe something we see there in the long term is going to rise. We must always follow it till the end. Now, of course, the specific operating rhythm of each stock is also the same. Some stocks will rise faster and then some stocks will rise slower, right? So please be as patient as possible with us. So now we're going to enter the trading and analysis of the individual stocks. So I'm not going to talk too much about everything else. Now, I just want to take a look at the stock. LT Larsen and Toubro Limited is an Indian multinational company engaged in EPC projects. Now, it's a high-tech manufacturing and services. The company's been operating in more than 50 countries worldwide and is a large technology, engineering, construction, manufacturing, and a financial services group. Its business spans the globe, and its performance and profitability have been growing year after year. So, first of all, it can be confirmed that this is a great company to invest in. So let's take a look at this chart. Now, the stock has recently experienced a certain degree of adjustment in its price due to overall market impact. So following the index's downward trend. Now, the price of the stock at the end of the week just dipped near the low of March 19th, and a doji candlestick has appeared. As we have learned about technical content regarding partial pressure and support from before, we should know that the position of a previous low will naturally have a supporting effect. From the chart on Friday, it can be seen that on one hand, the price of the stock is no longer falling due to the influence of the index, and then on the other hand, the vicinity of the previous low has a certain supporting effect. So therefore, a doji candlestick with a long lower shadow has shown up. Now, after a round of adjustments, the appearance of this doji candlestick indicates that the strengths of both long and short sides are balanced. In addition, buying interest at the lows has already started to appear, and the rebound is likely to occur next. So everybody, we can hold onto the stock for now. Okay, now let's take a look at Capacite stock. The company is engaged in construction, factory development, specializing in high rise and super high rise residential, commercial, institutional buildings, including super specialized hospitals, and in construction. Now, the company's operations are also very excellent. So, over the past 2 years, its operational performance has consistently grown with stable growth in the net profit and the EPS as well. The growth rate is also relatively fast. So, therefore, this is also a great company. It is not a problem to buy the company's stock appropriately, of course. Now, in fact, the trend of the stock is relatively strong. During the recent market adjustment process, the stock did not show such a decline, just consolidating and then oscillating at higher levels. In January of this year, a peak has reached. Currently, this peak has preliminary formed a short-term support. Even when faced with the first bearish attack, the stock only opened lower than this support level, but closed above it. Now, this indicates that this stock at least has one characteristic: its resilience to go down or decline, right? Its response to the overall market adjustment can be considered minor. If the stock market or the index enters a rebound mode, it is believed that this stock will also perform well. Just hold on patiently. Now, lastly, one point is that the initial reason for buying the stock was the anticipation of a quick interest rate cut by the Fed or domestically in India. So once the rate cut occurs, it would significantly benefit the real estate industry and stimulate the stock prices increases. However, since the rate cut is not expected to happen soon in terms of trading, it may be considered to exit at a high position as soon as possible without seeking excessive profits. Now, that's very important why interest rate affects real estate, right? So when we go out to get a loan, it's going to cost us more money. The public interest is not as interested in borrowing that money. Okay, last one we're going to do is going to be the NCC Limited. Now, this company is engaged in infrastructure development and is among the leaders in this field. Its main activities include commercial and industrial constructions, road and bridge constructions. We got water supply and environmental engineering, housing, power transmission lines, water resources, hydroelectric engineering, and real estate development. Now, the company's financial performance is excellent. I love this one. So with both revenue and net profit showing year-on-year growth, therefore, the company's fundamentals are solid, and its stock is a long-term bull market performer, consistently rising since the middle of 2022, and it's continuing to do so. Now, from a technical perspective, the stock is a long-term bull market performer. Looking at its recent trend over the past few months, it's evident that there is a bull market here. So we've just learned about Dow theory, and then we're seeing such clear successive rounds of increases with each high and low point higher than the last, indicates that the stock is still in a bull market from a technical standpoint. The recent weakness is partly due to overall market adjustments and then delays in the Fed's interest rate cuts and India's domestic interest rate cuts, which have affected stock price movements. However, this is only short-term behavior, and once the adjustment period is over, the stock will resume its upward trend. So there are two technical support levels for the stock. One is the upward trend line, and then the other is the previous low point. Now, currently, although the stock has not yet entered an upward or rebound rhythm, there's no need to worry too much. We're just going to continue to hold on to this as well. Now, once again, if we got more news on interest rate cuts, that would have helped a lot of these infrastructure companies that do rely on low loan interest rates, right? Now, also due to time restraints, I'm going to stop here for the analysis, right, of the individual stocks for today. I'll schedule further analysis of other stocks as well into the future. All right, everyone, that is going to be all for today's online course. Now, regarding the Dow theory and the analysis of some individual stocks, you can understand and digest these contents a little bit more. Our next online live broadcast is scheduled for Tuesday, April 23rd at 8 p.m. I hope to see everyone here again. Thank you very much to all my friends for their strong support. Please remember to take screenshots of this lesson, complete the questionnaire later, and then find the assistant to enter the draw. Best of luck and best wishes to you all. Thank you again for all your support, and I'll see you all next time.